Welcome to another episode of Equity Street, where we provide the roadmap to property wealth. We're answering the questions of real estate investors across the country, and of course, I am joined by one of Australia's leading property experts, Matthew Bauer, to answer your questions. So let's get straight on into it. This question comes from Gordon, and he said, Matt, can you provide a brief explanation on capital gains tax?
Yeah, fantastic, Gordon. Great question. So capital gains tax, as the name suggests, if you actually buy and sell at a profit, you make a capital gain, then there will be tax implications associated with that. In the context of property investment, you're basically looking at capital gains. If you purchase a property and let's say it's $500,000, you hold it for longer than 12 months and then sell that property in the future for say $600,000, you've made a capital gain of $100,000. Now, if you've held it for greater than 12 months, you're entitled to a 50% discount on the taxation position there. So you'd be taxed on 50% of that $100,000 gain, or $50,000, and that's applied to your marginal tax rate for that particular taxation period of assessment. If you sell it inside of 12 months and there is no discount applied, and therefore that $100,000 profit will be added to your marginal tax rate income for that particular financial year, and that'll be attached to or dictated by what income bracket you're actually in for that particular financial year.
So if they take part of your profit, Matt, is it fair to say they'll also take part of your loss if your property goes down in value?
Well, only if you sell. So if you've sold and made a loss, then obviously then that will be carried forward or consolidated against your other income and expenses associated with your tax return. So depending on your personal situation when it comes to income and expenses, or selling at a loss or a gain for that particular financial year, then some of that could be offset against other income, and that's where you'd want a property savvy accountant to analyse that for you and ensure that you're applying the right rules and fundamentals to your tax return.